recommendations. If you need a professional investment advisor, then you should go seek the services of a registered investment advisor, or call your broker. We're just sharing ideas. There's a disclaimer, everyone, for you guys to read.
Awesome. So before we get started, everyone, we have, there's a large number on Zoom, which is great. Put your questions in the question and answer below. I'll advise you in the chat. Let us know that you can hear us in the chat. Let me know if you're a beginner, an intermediate trader. Today's episode is really for the beginner, and Felix was super helpful bringing this to us, that this may be a good webinar, because we usually deal with people who have a lot of experience with options, but Felix thought it'd be a great idea, and I think a number of people who registered, that given people who have never thought about an option, an idea how to get started. And Felix has a wealth of information. 20 years on Wall Street, Felix?
20 plus years. Yeah.
20 plus years. I mean, he's worked with some of the great traders, big hedge funds. I think Stevie Cohen is one of the big names, but a lot of different traders on the street, and has a wealth of information. So with that, let's get started.
Is that to me?
That's to you, Phil.
All right, let's do it. All right, here, let me share my screen, and we'll take it off. I have a unique presentation. How's that? You see it? Everybody good?
Looks perfect. Yeah.
All right, good. So I titled this Learn Options, the Real Options 101. We're going to go through a few things. Who is Felix Frey, myself? What is optionsgeek.com? Why am I doing this? Why is everyone confused? What is everyone confused about? And what's next? It's not your typical Options 101 class. I think that's part of the problem. So I wanted to take a step back before anyone even talks about calls and puts. What I think is most important, and what I think will save everyone watching this an enormous amount of time, money, confusion, frustration, is how to lay out a framework, how to lay out a roadmap of which way you want to go in options, right? It's always important before getting into the details to understand where is it that you want to go, what do you want to accomplish, okay? So the Real Options 101 is understanding the issues that you'll face today after 50 hours of learning, 100 hours of learning. You want to understand what you're getting into, and you want to understand the problems, specifically the problem that I've uncovered. So let's get right to it. Let me introduce myself formally. Again, my name is Felix Frey. I want to thank Market Chameleon for having me here. I'm super excited to do this for everyone. I graduated the Wharton School at the University of Pennsylvania in 1995. Out of Philly, I went to work in Chicago. My first job was at Swiss Bank O'Connor. And O'Connor was known essentially for two things. They were known for trading options well and making a lot of money. And they were known for the best options training program on Wall Street. I went through that program. It's an 8-week program, and then 6 months on the job. And these guys were the best in the business. I was recruited back to New York in 1998 or so at Bank of America. There I was, my career really took off. It was there that I was put in front of some very big players. Bank of America is one of the top investment banks in the world. And I got immediate exposure to the top investors in the world. After about 10 years there, about 8 years there, I went to go work at Scoggin Capital Management, sitting side by side two of the best risk reward managers, hedge fund managers over the last 30 years. That was an incredible experience. And I basically built what I call a groundbreaking options trading system called 3 Steps to Profit that translates my experience. The 3 steps are essentially education. I've transformed the options education. It's brand new material that I'm bringing to the table. I've created a tool that I call a game changer because it helps millions of investors who are maybe comfortable with stocks or just brand new to options. And it eliminates really a lot of the analysis that you might have to do in order to trade options. Okay, so that tool, we'll get to that a little bit later on. I'll show it to you. And then the third step is really how do you get profits? And that's trading ideas. So I teach people, one, how to understand options the way the top guys in the world do it. Okay, and I'm teaching you how to buy options like the best in the world. 2, I'm giving you a tool to essentially do that. And 3, I'm showing you a process to find Okay, find and analyze the best risk reward trade ideas in the market. That's what 3 Steps to Profit is. And before you think about it, before at some point, whenever I'm giving a talk or I'm talking to anyone, people seem to say, Felix, you're smart. I understand what you're saying, but why are you doing this? Why are you talking to me on a Saturday afternoon for 20 minutes trying to tell me about options? And it's a legit question. So I want to really knock that out of the way real quick. And it brings me right to the 1970s. So we take a 35-second history course of the Black-Scholes formula and options education. So 1970s and 73, the Black-Scholes formula, that formula that you see on the top left corner, that was created by Black and Scholes. And from there, you got the Greeks and implied volatility. Now, these are traditional concepts that options education targets. Okay. And in the 1970s, there weren't that many people trading options. There was a few people on the exchanges. There was some corporations. There was more people trading options with commodities. Okay. So you had this group of people in Chicago, really in Chicago in the Midwest, looking at options, and the Black-Scholes formula came out and sort of helped put things together. Let's fast forward 40 years, 45 years today. Today, there's millions of people using options, millions. Okay, Robinhood just came out saying that in the last few months, there's over 2-3 million people that have started to use options. Okay, so there's a lot of people using options relative to the 1970s, 1980s. Over the course of my career, I identified a problem. The problem is very simple, that most people are confused. Most people are confused when they're thinking about options, when they're trading options. Confused about what? We'll get to that in a second. So I built Options Geek to provide answers. I created a new formula. I have new concepts. And most importantly, I keep it simple. I keep it simple for everyone to understand and for everybody to understand what they're looking at. And again, building this roadmap for someone to get from not understanding anything to eventually understanding exactly how they'll profit using options. Now, I like to think this is the next phase of the options industry's evolution. That's what I like to think of Options Geek. I like to think that that the Black-Scholes formula and the education that's out there has done a tremendous job over the last 47 years from taking no one or very small group of people to millions and millions of people trading on an app. That's an incredible feat by itself. But again, everyone, 99% of the people, my contention is that 99% of people in the world are somewhat confused. Okay. And I am trying to take us to the next level, to the next step where people understand what they're trying to do. They're very focused on which avenue they're going to take when looking at options. Options 101 really starts right here. This is the most important part of your education because it's going to save you hundreds of hours. It's almost like if I told you, you can go to, I'm asking you to go to California from New York. I'm in New York, go to California. And I say, okay, go ahead. Here's a car, get to California. And you come to a fork in the road and one is I-95 that's going to take you down to Florida. And the other one is, I believe it's I-6 that takes you all the way to California. You make that wrong turn, you take the wrong way, and it's going to really impede your efforts to get to where you want to go. So the distinction between the two types of options traders that there are on Wall Street is very, very important to how you learn options and how you said you go down one road or the other. The two types of options traders are the volatility trader and the directional leverage trader. So we're going to talk first about the volatility trader. The volatility trader focuses on the Black-Scholes formula, the Greeks and implied volatility. That formula I showed you in a slide before. The volatility trader actively tries to remain neutral on the directional risk of the underlying stock, which means what? It means he's not going to profit on where the stock goes. He's really profiting on how the stock actually moves on a day-to-day basis. That's what a volatility trader is focusing on. Okay. On the flip side, you have a directional leverage trader. Okay. The directional leverage trader uses options to profit from the directional movement or lack of movement in the underlying asset, because in options, there's three directions. There's up, there's down, and there's stays in the middle, no movement. Okay. So directional leverage profits mainly from where the stock goes. Okay. I think the stock's going to go here. I buy call goes up. I think the stock's going to go up. I buy call options. I'm going to profit if the stock goes way up. If the stock goes down, I will likely lose. For a volatility trader, it's not that simple. I can buy a call option as a volatility trader, and if the stock goes up, I can make some money or lose some money. If the stock goes down, I can make or lose some money. It's going to depend. Okay, it's just two separate ways of how, at its core, how a volatility trader trades and how a directional leverage trader trades. Okay, so given that understanding, I want to give you a 30,000-foot view of the options world. Okay, this is the options world. Okay, you have your exchanges, and with your exchanges, you have the market makers. Okay. Next, you have the investment banks who are trading options, and they trade options through the exchanges, and sometimes they're trading with the market makers. Then you have these institutional customers, which could be insurance companies, corporations, could be other banks, small banks, and this group called hedge funds. Okay, that's the institutional customers. Now, in the 1970s and 80s, this was the whole industry. There wasn't millions of people like I showed you that are trading on their apps. This is the industry. So you have market makers, investment bankers, derivative options traders in the investment banks. You have their customers, and you have these hedge funds. Now let's fast forward. Today, you, the retail trader, the average investor, makes up 99% of the population, 99.5% of the population. There are millions of retail traders, whereas the market maker group has shrunk, and even the investment banks have less and less people as derivative traders. Institutional customers has grown, but it's still, this isn't to scale. This picture that I'm showing you is not to scale. There are millions and millions and millions of traders that dwarfs the number of people that are looking at options on Wall Street. It's important to understand this and appreciate that. Okay, so we said they're volatility traders, and we said that they're directional leverage traders. Now, who are the volatility traders? The volatility traders are the market makers who trade on the exchanges. Okay, they are the derivative traders at Goldman Sachs, Bank of America, JP Morgan, all the big investment banks. And then there are a few volatility traders on the hedge funds, on the hedge fund side. The main one being Ken Griffin. Ken Griffin at Citadel, one of the largest volatility traders in the world. Another one would be a D. Shaw. There's a few. There's a handful, maybe 1 to 1.5% trade volatility. Now, as far as the institutional customers go, there's a group now that are trading volatility as an asset. But trading volatility as an asset is not the same as trading volatility. It's important. It's an important distinction. Trading volatility as an asset, which many of the big companies, big corporations are doing now, is they're taking a directional view on volatility. Why would they do that? They would do that simply because when the market crashes, volatility generally goes higher. Okay, and so to protect the portfolio, they have a lot of mathematicians that are looking at this volatility product and say, you know what, we want to be long, we want to own volatility as a hedge. Okay, so they're playing this game of using volatility as a hedge. That is, they are investing in volatility. However, they are not volatility traders. Remember, the volatility traders are the market makers, the investment banks, and a sliver of hedge funds. Okay. Now, who are the directional leverage traders? The directional leverage traders, as I just discussed, are the institutional customers trading volatility for direction, and these hedge funds. Okay, and these hedge funds. Now, these hedge funds, okay, who trade direction are people like Carl Icahn, Steve Cohen, George Soros, Bill Ackman, Dan Loeb, John Pulse, people you see on CNBC, people you read about in the New York Times or the Wall Street Journal. These guys are directional leverage traders. They make money by getting the direction right and trading options. .9% of retail traders, the average investor, you are directional leverage traders. Okay, you are making your money off of the direction of the stock. That's where most of your money will be made. Even selling options, believe it or not, will mainly, the main profits will be made from the direction of the stock. So given all that, I want you now to understand that the education, let's talk about the education out there. The education, the available education, the education has been out there for 47 years. That went from O'Connor, where I used to work. That was one of the first pieces of education that came out. Then there was Thinkorswim. Now, along the line, you know all the big guys' names, but that education was created, taught, and supported by the volatility trader. Okay, this is very important to understand. Okay, because ultimately, this is the industry's fundamental flaw, because most people are directional leverage traders, and the education that's been created is really focused towards the Greeks, the implied volatility, which are derived from essentially this Black-Scholes formula. Okay, there's a fundamental flaw. There's something that's not connecting with people, and that's really what's confusing people. Now, when I say that the market makers have really developed this education, you can see that most of the teachers are market makers. Most of the professors at the university were former either market makers or just they learned the Black-Scholes formula. Okay, the OIC, which provides, the OIC is the Options Industry Council. They are supported by the industry. If you can go online and look at the OIC and see the board of directors, and the board of directors are the exchanges, there's citadels on the board of directors, you have the investment banks. Okay, so they're supporting this education. They created the education. It's good education if you want to be a market maker, if you want to trade like a derivative expert at an investment bank, if you want to trade volatility at like a Ken Griffin. Okay, that distinction again isn't made by the industry, and so it's confusing to people. Because if you go down this rabbit hole of trying to learn with that education, you get caught into how do all these concepts relate to what I'm trying to do, which is simply I'm trying to buy call options or buy put options because I think a stock is going up or a stock is going down. What do all of these things have to do with that view? Now, most people, most average investors, most retail traders walking in the door, they want to trade like these guys, the hedge funds. Okay, Carl Icahn, Steve Cohen, George Soros, all of these guys. They hear them, they hear the trades that they're making, and they want to trade like them. I call these guys the top 1%, the sharks. Okay, and again, there is no education that's going to teach you or explain to you how they think, how they act, and how they use options. Okay, and I'm going to prove that to you. At optionsgeek.com, I built optionsgeek.com to show you exactly that, to show you exactly how they trade. And that's how 99% of the people in the world want to use options. That's how most of you watching this show want to use options, like they trade. So the question I'm going to ask you at the end of all this to think about before you embark on what's a call or what's a put, because depending on which road you go, the answer is going to be different. So the question you have to ask yourself is, who do you want to be? Do you want to be a derivative trader at Goldman Sachs, at JP Morgan, or at Bank of America? Do you want to be a market maker? Do you want to scalp for, scalp the teenies out there, scalp the pennies? If that's what you want to do, then again, the available education, learning about the Greeks and implied volatility are going to be very, very important. It's a must know. But if you want to learn how to trade options like the biggest hedge fund managers in the world, I can prove to you that you're not going to need to know that. That's what my education is about. It's changing the discussion from what's available to risk reward, to probabilities, to odds. And it's showing people how to play the game without confusing them about something else that they may not have to know. So what I've done is created education that is designed for the average investor to trade exactly like these guys trade. And I'm simply asking you, who do you want to be? Now, let's talk about how the top 1% use options. Okay, let's talk about how they use options here. I'm going to give you I'm going to say 4 things. And by the way, please, I have this presentation and I'll show you where to get it. But I want you, you don't have to write notes or I want you just to listen and absorb what I'm trying to tell you. You're going to get more out of that than trying to write down all these notes and these slides. You'll get to see this later on.
So this presentation is going to be available for everyone, or maybe on your site or something, correct?
Exactly. Okay.
Great.
How do the top 1% use options? Four statements I'm going to make. They buy options generally. They try to avoid spreads. They buy out of the money options. And very importantly, they're always trying to make 150 to 400% returns. Okay, they're always trying to do that. And I would handicap what I'm saying here, that they buy options 90% of the time and they're buying out of the money options 90% of the time. And again, they're not, it's very important to understand, they're not buying options. They're not day trading options. Okay, they buy them with some time, with some purpose. They're not day trading options, and they're not trying to buy an option for $1 to make 20 cents. They're not trying to buy for $1 to make even 50 cents. They're trying to buy an option for $1 to make $2.50, to make $3, to make, they're going for the big wins. They're trying to find opportunity where they can make a lot of money. Okay, so it's very important that we understand how these guys are thinking and what they're doing. They are going to the options to buy them for two reasons. The two reasons are the limited liability. It's important to understand is limited liability and leverage. Okay, limited life. I can spend $1 and the most I can lose is $1. That's limited liability. I can spend $1 and if I'm wrong, I only lose $1. It doesn't matter how wrong I am. I can only lose $1. But if I win and if I'm right on where I think the stock is going, then I can win an unlimited amount. Those two key points are what attract the sharks. Okay, that's why they buy options. But let's continue, because I said that there was this problem. There's this problem that I've identified probably about 15 years ago, mainly because I didn't understand. And when I tell you that I am one of the top experts in the world who traded at a top investment bank, at a top hedge fund, if I don't understand something, if I can't understand something, I'm not saying I'm the smartest guy in anything, except I trade equity options. I know about equity options. And if I have a question about equity options and I'm asking people around me and they don't know the answer, I think there's a problem. There's a big problem. How can the average person come in? Remember, I'm 10 years in the business. I'm still asking the question, how can the average person walk in and in a couple of weeks understand really how to answer some of the questions that I was asking? I've narrowed down options education to two questions, two simple questions. Okay. And I am proposing that everyone start asking these questions. Everyone listening to this program should start asking any options professional, any guru, anyone online saying they understand options, they buy options. I want you to start asking these two questions. Okay. The two questions are, one, when do I buy options? Because not every idea is an options idea. Okay. So the person who's teaching you options or who's this options guru, they should understand, when do I buy options? And you know what? That's somewhat of an easier question. The second question is the real stumper, right? Which option do I buy? How do I buy the right one? Which one? There's so many. How do I buy the right one? If I'm looking at Apple, there's 100 strikes. Which one do I choose? Okay, so two questions. When do I buy options and which option do I buy? I'm out there saying that 99% of all investors, including Wall Street professionals, can't answer these two questions. I'm publicly out there saying that, and I stand by my statement. Okay, so I want to go through it though. I want you to fully understand these questions, because at the end of this, if you can make sure that you are pushing these two questions to ask, to see whether or not the person, whoever it is that's going to teach you or wherever you're going to learn, if you're going to get those answers, because it would be a waste of time to go spend your money, go spend 100 hours and then have the same question. I talk to at least 10 people personally a day, and I simply ask them this. It doesn't matter if you spend 1,000 hours. And I'm going to show you, I'm going to prove it to you, because I won't say anything that I can't prove. But it doesn't matter if you spend 1,000 hours. If you can't answer two simple questions of when do I use options and which one do I actually choose, and prove it to me, then how good is the education for what you're trying to learn? Okay, that's the problem. But let's take a look at AMD as an example. I'm looking at a stock here. I was looking in early June and I was saying, look, here's a flag. Stock's trading straight up. Here's a flag. Earnings are in late July. I think it's going up. To me, this is a bullish chart. I think it's going up. Now, my idea, this is my idea. It's no different than your idea. Your idea is just as valid as my idea. Okay, this is what I see. I'm looking at the charts. I like it. I know AMD, a little bit about AMD, and I'm trying to figure out whether or not this is an options play. Okay, so that's when I have that question. I have an idea. Everything starts with an idea. Options are simply a tool to express your idea. So everything starts with an idea. Okay, and again, this question of when do I buy options, I want to make sure that you understand what I'm saying. I want it to sink in. So I'm going to show it to you. Here's Steve Cohen's portfolio as of March 31st, 2019. Okay, Steve Cohen is the owner of Point72 Capital, formerly SAC Capital. He's made $13 billion trading in the market. He knows what he's doing. Now, there's this, slight cloud in his past on insider trading, But at the end of the day, I don't know anything about that, but I do know that the guy's made $13 billion. And here's his portfolio. Here's his portfolio. So I want you to take a look at his portfolio. Now, when you see his portfolio, and you'll see that there's calls, puts, Disney is his #1 holding, but there's calls, there's puts, and then there's stock, Disney. In Netflix, he has calls, Anadarko Petroleum calls, Marathon Petroleum calls. And you can see that. So now let's just take a look. Let's take a look at his portfolio. It goes all the way down. Okay, and I'm going to let you see it again. And this is his portfolio. He has about 50 names here. He has more, but these are his top 50 names. Okay, so let's just rewind that and look at it one more time, because I want you to figure out, I want you to ask yourself, which ones have options? You see some options there, not that many there, not that many. Oh, there's another one. Qualcomm has options. Okay, so the question is, of his top 10 positions, eight have options. 2 don't. If we go further in the next 20, about 20, there's only 2 that have options. And then on the last bit, there's none here. And then there's another one here. Okay. My question to you is, why do some trades have options and some don't? That's the real question you should be asking. How did he choose out of 50 positions to only have 13 or 11 or whatever it is, 11 out of 50? How does he choose that? How does he know? That's the real question. That's what you should be starting to ask. And when you get here, when you start looking at this, you know, this picture I'm showing you, we start with an idea. Okay, the real knowledge here is, when do I buy options? When do I not buy options? Now, I built options education, step 1, to help you understand how these guys think, how they think about options. Step 2, I built this tool to actually give you that answer, give you the answer of when it's stock or when it's options. Okay. And then step 3, I talk about how to find these trading ideas, how to get you these trading ideas. But trading ideas ultimately need something else. They need either research, charts, or they need data. And that's where Market Chameleon comes. So I don't have that. So I teach people how to use Market Chameleon, how to find great trading ideas. I chose Market Chameleon. Frankly, I've looked at all of them. I think it's the best, mainly because they give you the hard data. You can actually dig in level after level after level and get the data you need to get the right answers, to make sure what you're looking at is exactly what you need. To me, that's extraordinarily valuable. Now, back to AMD, because once we decide that options are the play, the next question is, how do we actually choose? How do we actually choose? Here's the board on AMD. Here's the options chain. How do we actually choose which strike? There's 16 of them. Okay, so do we buy options? Maybe. And if so, which call do we buy? I like AMD. I think it's going higher. You might like a stock, any stock. You think it's going higher. How do you actually choose? Okay, now, if you can't explain it to me, okay, as an expert, if you can explain your answer to me, then you're guessing, right? You're guessing. You got to be able to explain why you're choosing something. You're putting your hard-earned money to buy a call option because you think AMD is going up. No problem. Just tell me why you're buying that one. If you can't do that, again, you're guessing. And options is a probability game. Make no mistake. Options is a probability game. And if you are guessing in any probability game, then you will lose over time. It's guaranteed. So anyone who's trading options, just buying them and selling them, buying them, selling, without this understanding of what they're doing and why they're doing it, is essentially guessing. And I would bet that they would lose over time. I would bet it's just allow them to keep playing because they don't really know. They don't have a process for actually choosing. And so this is important. It's very important, these 2 questions. It's everything for anyone who's trying to buy options. Okay, now I'm going to give you some wrong answers that you're going to hear. Okay, these are wrong answers and these are out there. They're all over the place. Okay, I hear them every day. Okay, people are saying you buy the 70 delta in the money put. How is that possible? It's not. It's not possible that every idea you have, the 70 delta in the money put, is the option to buy. Then there's one a little bit more sophisticated. Buy the option with the most gamma. Well, the option with the most gamma is the at the money option. And again, this is a beginner class. We haven't even talked about in the money, at the money, out of the money. But what I'm telling you is that it's a very specific option they're telling me to buy. How can it also be possible? It's not possible. Then people are telling me, well, buy the out of the money option. Again, there's so many. If you look at AMD, you're down to 8. Okay, out of 16, you got 8. How do you choose the right out of the money option? Now people are saying buy low volatility options. That's what they say, buy low volatility options. Well, that's for a volatility trader. Right now, we are in an environment of high volatility. Okay, we are in an environment of high volatility, yet you still see the top guys in the world buying millions of options. There's millions of options being bought every day. Okay, and so it's important to understand that buying low volatility is not the answer. Okay, because people are still buying options today. I could show you 30 names where people bought a ton of options today, and they were probably very high volatility relative to what they should have been. Now, the last thing, if you're asking these questions, this is what you'll get. I call them deflection tactics. One, I don't buy options because blah, blah, blah. I try to stop people before they go any further. I say, I'm asking you, do you know how to choose the right option? I'm not asking you why you don't buy options. If you tell me that you don't understand how to buy options, I can accept that. It's not a problem. And it's not because you don't understand if I told you. It's just nobody's told you. Nobody's told people this answer yet. So the next person might say, well, you have to worry about the IV. We've already proven that's not completely correct. You could use that, and some people do use that as a guide, but at the end of the day, it's not going to really tell you the difference between one strike or the other. You have to know the Greeks. Again, I show options, I teach options without going through the Greeks, because the way the top guys in the world, it's a process that eliminates. The way the top guys in the world, they use a process that eliminates the Greeks, okay, which people find very interesting, okay? They might also say something complicated meant to confuse you. Happens all the time. When you ask an expert, the expert comes back with a very complicated statement. And as an average investor, you're not sure how to even come back with a question once you hear that, because it's intimidating, frankly, right? And they also might say something that completely ignores the question. Now, the best one I heard so far is when someone asks, because I ask people all the time, just go ask anyone you want. Go ask, how do you choose? How did you choose this to buy? And the best answer I think I heard was someone said, because it works. They choose this one because it works. I don't know what that even means. If you can't explain to me why you do it, like, don't tell me it works. Tell me how to do it. Okay, that's the problem. Most people are hiding behind this, either a complex answer, or just saying, hey, this works, and because it works, you should just do it. There's got to be an explanation. People are smarter these days. People want to know. They want to know the answer and why the answer is the answer. So again, I'm out there saying 99% of all investors can't answer 2 questions. And I wouldn't say that without really actually having at least some proof. First of all, I'm living proof, okay, that I didn't know the answer until I actually went from the investment banking side to the hedge fund, and I sat next to 2 guys, and I had to sit next to them for 6, 7, 8 years before I started realizing what exactly they were doing. Okay, because I was so down the rabbit hole of, you know, the Greeks and implied volatility and thinking a certain way that I couldn't even see what they were doing. Okay, so there are 3 pieces of proof that I'll show you very quickly. I'm not going to go through them in detail, but I will show you where to see it yourself later on if you're interested. 1 is the OIC. 2 is from a top market making firm. 3 is from an investment banking head trader and top hedge fund trader. Okay, doesn't get much higher than that guy. Here's the OIC. Okay, you can see there the class is buying calls. That's 101. This is like the first, you know, exactly what everybody thinks 101 is, options 101. How to buy calls, and they just jump right in it, okay? Without telling people this, hey, if you want to be this person, you go that way. And if you want to be this person, you go that way, okay? And choose correctly. And most people, they just send people a certain way without having them realize that maybe they don't want to be that person. They don't want to be a volatility trader or a Greek trader. They want to be this person, okay? So the OIC has this class, buying calls, one of the first classes, 31 pages of PowerPoint, and they have this options chain, and it says, after discussion with our broker, because I'm always curious, I'm always looking for people who say, yeah, we give the answer. There is no answer out there. But here, OIC, this is the industry. After discussion with our broker, we decided to purchase one XYZ June 80 call for a quoted price of $8. That's their answer. That is their answer for which one do you choose. Okay, they are saying, go ask your broker. Now, the interesting part is that the OIC also teaches the brokers. So you have the broker who learned, you have me asking the broker who learned options at the OIC, who must have asked his broker, and it's circular, and you can easily see there is no answer. Okay, so that's the OIC. And you can go through all 30 slides and they'll talk about everything else except that one question. How did you actually choose this one? Here's a market maker in Chicago on Reddit. I'm always floating around looking for people, that are willing to talk to the public. And he was actually talking to the public on Reddit. It's there. You can look it up yourself. Trader Throwaway 124. I basically started asking the question. I said, here's the real problem. And I was like saying, like, there's, you're coming out here talking about what you do. Maybe you can explain or help me tell everyone that, this is a real problem. And I asked him and I started forcing the question on him. And you know what? Eventually he said, you're correct. I don't know the answer. Okay. And he works at a top market maker in Chicago, out there talking to, probably there were 500 people on Reddit he was talking to. And again, people are confused. He doesn't even know. Okay. But he's a market maker. He's trading a certain way, which is totally fine. There's a lot of ways to make money in options, but people, in general, people don't necessarily want to be a market maker. Now, you can read the whole dialogue. I have it all there. The second guy, or the third point is this head trader, who's the head trader. Ultimately, you'll see he was the head trader at some of the bigger investment banks like Nomura, Smith Barney, Solomon Smith Barney, and Millennium. Now, Millennium is a top hedge fund in the world. Okay, a top hedge fund in the world. I took out his name just to not use his name out there, but he's a big guy. He doesn't get much bigger than this. Now, he started off, and you can read it with a little bit of a backhanded compliment, saying that I've simplified it too much and blah, 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 but I like what I'm doing. Thanks. I immediately went back to him. It was very much a backhanded compliment. And I wanted to ask him, I said, if you know, why don't you tell me the answer? And, and when I was pushing and really trying to corner him, he didn't really know. In fact, he did what a lot of the smart guys do. A lot of the big traders do. They said, he said something that the average individual is not going to understand. You're not going to be able to come back with a question or an answer. He said, look at it from the perspective of a simple, he uses the term simple, delta neutral back spread. I immediately, you could see, again, you could see the dialogue we have. I just said, why don't you give me examples? Like, I want a simple answer. Just tell, I'm asking you a simple question. Don't overcomplicate it. Just tell me what you think it is. I eventually called him. We started talking. You'll see here, I think the important part is after I wouldn't let him off the ropes, he basically starts backtracking. And you can see him saying, it certainly appears that you are for real, he says. So he realized I'm an expert. I'm not going to give up. I know what he's talking about. I know his tricks, and I'm cornering him to say, just answer the question. It's not a problem. We're not talking about this. That you gave me an example. I want you to answer the question. And he basically says, let's start with the fact that I'm a delta gamma vol skew guy and typically trade the underlying for delta bets, but it's definitely not my strength. No problem. But I want people to understand that this guy is at the top of the food chain in options. And he's saying that it's not his strength. I asked a simple question. I just asked, which one do you choose and how do you choose? And he didn't have an answer. I spoke to him and he eventually admitted that he didn't have the answer. I don't tell people the answer unless they say, all right, I don't know the answer, because I've learned that after telling someone the answer, they say, of course, that's the answer. I knew the answer all along. Well, I don't think that people do, but I'm not saying that because they can't understand. I'm just simply saying that I have new information. I have new information in the market on how the best guys in the world do it. And I'm not expecting anyone to understand. In fact, once I can teach an expert in 3 minutes how they do it and they will understand. But unless somebody teaches you, me, then the person doesn't understand. So it's not anything about intelligence, but people sort of think that it is because they're supposed to be the expert in options and they can't answer a simple question. So let's get back to AMD. Let's talk about what I built for the average investor. Okay, so AMD, we're here, and what we need is expiration. We need a target stock price, and we need a confidence level. Okay, that's how you start choosing a right option. That's how you start choosing the right option for you. That's unique to you. Now, the options chain I built is very unique. It takes, see, for the first time, the options chain is asking you what you think. Okay. When you go to an options chain and you see numbers, it's not asking you what you think. It's just saying, hey, these are the numbers, pick one. Well, everyone has a different view on the stock. Okay. And that becomes incredibly important to the process for the top 1% of investors. Okay. They want to target, they need a target stock price, some confidence level, and some expiration. When you give this tool I built that, a number pops out. So if I stick $75, 80% in an expiration, a number will pop out. And if I change that number from 75 to 83, a different strike pops out. Depending on where you have your target stock price and your confidence level, you will have a different strike, as well as a different expiration. You change that expiration, you're going to get different strikes. Time has elements. So this algorithm, this tool is incorporating what you think, because that's important. That's what makes a market. That's what makes a market in options. In the problem when, first, what's very valuable to a volatility trader, if that's what you're going to be, is sort of this mathematical data that you can go back and look. But for people who are looking towards the future, who are buying an option because they think for the next 4 weeks, something will happen. Okay. Looking backwards sometimes is not the answer. Actually, many times it may not be the answer. It can guide you. But at the end of the day, when someone finds an idea or something that is, they believe is an opportunity, they run to the options market to see. And now you could actually see if what you are plugging in there is priced in by the market. Okay. Now, I've also added shading. Okay. Because this is, I call it the window of opportunity. Okay. With that shading, right, you can actually see this is where the top guys in the world buy options, in that shading. So when you stick your unique view, if the pointer lands into that shading, then that's a good option for you. Okay. That's it. That's the analysis. There's no analysis needed. That's all that you have to do. The analysis that's needed is in concentrating on the target stock price. That's what the best guys in the world do. They focus on where the stock's going to be, whether it's through, again, technical analysis, whether it's through the data. And we're going to show you how to do that in a second. We're going to lead you to sort of how Market Chameleon now comes in, because once you understand the process, you're going to quickly understand that you need trading ideas. Okay. So I can teach you options fairly quickly. I can give you a tool to show you what works. I can then show you a process to find great ideas, but ultimately you're going to need ideas in order to trade. Now, again, education, tool, trading ideas. In 3 Steps to Profit, 50 plus videos, Q&A, 12 hours of material, beginners, intermediates, even experts are on there, but I won't tell you who. You can learn the options over the weekend very quickly. The tool, again, no more analysis needed, no more guesswork. I've simplified options for the average investor. It's a game changer because it gives you the answers to these 2 questions that I believe most people can't answer. Okay, it is one of Wall Street's best kept secrets. There's a select group of people that focus on options in this manner. And those are the guys I mentioned before, the top 1%, the sharks. Okay, I was lucky enough to sit next to them and to deal with them for 20 years. That's why I know the answer. Now, again, trade ideas. Once you get to understand the educational tool, the trading ideas, I use unusual options activity. Now, many people are using that. Okay, many people are out there looking at it, but I teach a very specific process and a very specific way of looking at it. And that's where I get the information, which is at Market Chameleon, how I filter that data, which is important, how to analyze that data, which I give you in 3 steps, and backing out a target stock price from that information. So again, it's developing the ideas. I do this all for a one-time payment. I basically also give you, I give you the lifetime membership, lifetime access to the tool, and I give you 1 month free of this Winning Pick subscription. So let me briefly talk about what that is, very briefly. Essentially, it's my trading ideas that I come up with 2 to 4 times per week that I'm giving to subscribers, whether on a monthly basis or an annual service. We trade puts and calls. I'm giving you education on how to do risk management. I'm making it easy for you to think about playing the game. I'm teaching you how to play the game. no Greeks, no implied volatility. Where again, each week you show these type, you'll see this type of screen. There'll be 265 trades, every trade we've taken, and you would see exactly where, you know, the date we traded it, when we got in, when we're getting out. Actually, you don't see when we're getting out. I teach you a risk management process to tell you where to get out. That's a whole nother story, but essentially you see the ideas, okay? This is where you see from March of 2019 to February, you see estimated monthly ROIs following a simple strategy that I teach, but for everyone that doesn't, it's not one strategy fits all, meaning you, depending on how conservative or how aggressive you might be, you're going to change your plan and change your risk management technique. If you go to the free membership at optionsgeek.com, you will see every trade we took and how this estimated monthly ROI was taken over the last year. Also, you can get it at inside this ebook called Catching the Crash, where you'll see every single idea. I have it all out there for you. You will also see on the free membership, which I'll show you in a second, you will see this video. I call it Win. I was lucky enough to have an Options Geek member send me his portfolio, send me every day how he basically invested $2,500 and turned it into $7,820, almost $8,000 in about 4 or 5 months from February to July. Not only do I show you the day-by-day progression of his account, he only traded my ideas. And if you go to the end of the video, you will see every trade from February to July, and it's all there. So you have March of 2019 to February in the ebook. And if you watch that video at the end, you will see all the trading ideas from February to July, even some open trades right now, because it was at July 8th. Now, let's put something in perspective here, okay? Because I'm telling you about an education that is much different than anything out there. Anything. There is no education out there that's going to teach you how to answer those questions. None. And I know most of the education. I've actually looked at most of the education, okay? So options education out there ranges from free to $15,000. But again, nobody's giving you those answers. I also want to put in perspective, I live in New York City, Westchester. The hourly rates for professionals are anywhere from $300 to $1,500 for doctors, lawyers a little bit less, and down the line. I basically built 3 Steps to Profit, 20 plus years of experience, put it all together, lifetime membership for the education, lifetime access for the tool, okay, where I pay the data because data costs money. You can ask Will and Dmitry how much data costs, okay, because it does cost money. And I also give 1 month free of Winning Pick subscription. You can cancel that at any time. Now, I finished that, but if you're still not convinced, even better than that, I'm going to stop share this one and I'm going to share another screen quickly. I'm going to take you into the free membership area quickly, okay, and show you what it looks like, okay? I'm basically trying to show you what's possible here. I'm trying to show you how members, and this isn't the only member, this is one guy. I have guys that are making the same amount of money for the last year and a half. They're making very good money. They love the service. I have every day I'm getting a new person saying, this is incredible. Essentially, I've gamified options investing with a process, okay, with a process. So this is what you'll see. I've also been lucky enough to get him. I've interviewed him. So I'm going to put that out and let him share his experience, his own words. I then have 4 steps here in the free membership. Again, some of the stuff you've learned today, which is what's wrong with options education, gets a little bit more granular. Okay, step 2, I show how the top 1%, again, more granular, goes more into detail of actually how they do it and why the Greeks don't matter. Okay, on step 3, I go into a little bit more. This is a great interview on my experience over 20 years on Wall Street. Also, my experience interacting with some of the sharks and how, they beat me a couple of times and how, you fight the fight each day at the investment banks. And then step 4 is this best options trading ideas in under 10 seconds. That uses Market Chameleon. That's the webinar I did with these guys that's shown people. That is a tremendous webinar. In fact, I probably gave too much information. Okay. It should cost that information I gave it should cost people money. Okay. But I gave it away because I want people to see value. I want people to understand what we're doing here at optionsgeek.com. I also, once you're done there, we start getting into the nitty gritty here. This is just another quick video. Here's the proof. Those emails that I showed you want to read the dialogue. Here's the proof. You can go there. Here's an interview where this guy, Options Insider, Great guy, great radio host. He's seen that. He's seen everybody. This guy's been around for 15, 20 years. He's seen everybody. Called me unique. Okay. I'm unique because I'm out there teaching people how to buy. Most people showing people how to sell. Okay. Within the free membership, we're still in the free membership. You have all of these articles, posts, beginner posts, trying to teach you things, give you an idea of what's to come, an idea of what you should be thinking about. Okay. Then more importantly, I start you off. I actually start you off with 3 steps to profit lesson, which is step 1 of my 8 steps to profit, understand options in 8 steps. Step 1. Not only do I give you the 22-minute video, okay, transcript, because all of these videos have transcripts. You can go all the way down, 22 minutes, all the way down. Okay. And I teach you. Not only do I do that, I actually give you the answers, Q&A for that lesson. Okay. And then it also ties into this options challenge, which is essentially a game I ask you. So if you don't think you're a beginner, most people here are beginners, but there's a lot of people that don't think they're a beginner. I say, here's a challenge. Put these in order. 9 Post-its. Go put them in order. See what you come up with. See if you know the issues. See if you can understand. Because if you're anything but a beginner, then you should understand how to do that. Okay. And I can tell you that most people don't. Most people don't know the issues. And once they try doing it, they start saying, that's interesting. But what's more interesting is that it doesn't matter. People spend 20 hours looking at YouTube videos and they can't do this. But what's more interesting is that after one lesson, just that step 1, you'll be able to understand the issues in this game. Okay. So I'm telling you that I teach on Wall Street and I charge $300 to give this lesson, the one that I give for free, and allow the group that I teach to play this game and go through the answers and teach them the concepts. This lesson right here, I put out for free and I charge $300 on Wall Street. Okay. I also give these options myth webinars, and these are 7 must-know concepts that I give people to warm up. Okay. So this education right here, this free membership, plus I have 3 ebooks. I have all these other webinars for you to click on and mess around with. I have a lot of information here to get you going, to get you started. You want to get started, you want options 101. This was options 101. Okay. Now you have to decide, do I want to be this person or that person? Do I want to sell options? Do I want to buy options? Okay. And you can go through this and still not have to, you don't have to make that decision until you go through all of this. So I think that the part of the problem with the options industry is that they immediately jump to puts and calls. And that the reality is that, you're missing out on the decision you need to make on who you want to be, how you want to be it. Okay. So that is the free membership. I advise all of you to jump on, take a look. And, I'd like to leave it now for either questions or to Dmitry and talk a little bit about, because look, I can only take you up to a point where I'm teaching you one process, and my process is an unusual options activity. Now we have an hour webinar where I teach you step by step how to do that. But the beauty about Market Chameleon is that there's 10 different ways to find ideas on Market Chameleon. I just happen to use one and focus on one. Okay. But there are 10 different ways. And before this started, I told Dmitry, I think some of the best things he has there are seasonality, earnings. He has dividend stocks, calendars and whatnot. But I think the seasonality and the earnings and the unusual options activity and the data that's in them, top notch. You can't beat it. The filters, the way it's easy to, you just have to know how to use it. And I know that Will and Dmitry have been putting out YouTube videos describing that. So I'll leave it to these guys. But that is where the Market Chameleon really takes the next level. It's like I'm handing the person off to them.
Awesome job, Felix. Man, take a breath. That was a full hour. That was awesome. Lots of, we have a few questions. I think you got to just about everyone. You know what? I forgot to I put a little poll together. So Felix, Dmitry, and I can maybe get an idea that we still have a bunch of people who are, we're near almost 150 people between the 2 channels going off. So my first question, I'm about to launch it. Have you ever taken an options education course? A yes or no? And if you have never taken an options education course, would you consider one? Yes, no, maybe. I'm launching that poll. That will be helpful to all of us kind of figuring that out. Anyways, first question. This is from Mike Chandler, one of the great chameleons out there, and definitely not a beginner, but he is asking, are the out of the money options buying, when you look at them, Felix, short or long dated? What is a typical?
It all depends. And the beauty about it is that the way the top guys actually, let me just get this off my screen. Have you taken option? I'm going to say yes. And I just want to take it off. Hang on. Okay, there we go. The top guys in the world, they focus on, and you'll see this in how the top guys in that video I showed you on the free membership, but they focus on an event. Okay, they focus on an event and a target stock price. Okay, the event, okay, removes what you're trying to do, because it's a probability game. You're trying to remove the guesses. You don't want to guess. Okay, so these guys, they don't like guessing. If they have to make one guess, that guess is on where this stock is going. Okay, and when it's going to get there. But when it's going to get there, they can pick earnings. They can pick some announcement that they believe will unlock the value in their stock. Okay, and that's the research that they're doing. They're doing research to unlock that. So they could trade 2-week options. They could trade 4-month options. They could trade 1-year options. It all depends on when they believe the value will be unlocked that will trigger that stock to move toward their target stock price.
Awesome. Can you, Rajesh is asking, can you be in between, both a volatility trader and a directional trader?
Great question. You know, there are many ways to trade options. I'm very specific on what I'm saying. My experience has been dealing with the top guys in the world. I know former O'Connor guys that are trading both sides. They trade, but they are former O'Connor guys. These are the top guys. You know, these are the best guys in the world. You're talking about two very specific. You know, if you're going to trade the volatility side, you know, and you want to be an expert, you got to spend a lot of time digging into that stuff. You know, most people don't have that time. So can you trade both? Of course. I think it's left for the elite people, because let me tell you, the minute you buy a call option and the stock moves in your direction, then you try to trade a little bit of the deltas. But now we're talking to higher level options, but you try to trade just a little bit, or you try to sell a little bit of stock. You've now immediately turned that trade from a directional trade to now a volatility trade in some respect. And that's hard to do unless you really understand what you're doing. It's very difficult and it's very hard to do that. Can you use volatility in the Greeks as guides? Sure. You know, people talk about IV crush. It's a very big concept that's used that people talk about in options education, the IV crush. That's all you hear. Well, the top guys in the world, they don't necessarily spend a lot of time thinking about the IV crush, because if they are right about where the stock is going, then it's not going to matter. Okay. And they don't want to spend 100 hours trying to figure out where IV is going to be. At the end of the day, IV is going to be where it's going to be. They think the stock is going to go to where they think it's going to go. If it doesn't get there, they're probably going to get out of the trade. Okay, wherever it is. So what does it matter if they were right or wrong with the IV? It's sort of, they believe they're doing a trade because they believe they know where the stock is going.
Awesome. Someone's asking, when you're looking at unusual options volume, how does Felix identify whether the options are being bought or sold by the shark?
Great question. It's a great question. And let me tell you something. I'm going to be very, very, very clear. If you are playing that game of following the sharks, you have to be 100% sure that you are following someone that is buying the option. Okay. Otherwise, it all blows up. Your whole thesis of I'm going to follow this trade because 20,000 options traded and I'm just going to follow it. You have to be 100% sure. The only way you could be 100% sure, and it's the reason, and it's one of the main reasons I use Market Chameleon, is because the only way you can do that is through the data, is by digging into the data and going in deep into the data. Not just because you saw intermarket sweep or you saw this or you saw that. You have to understand what you're doing and dig and make sure and be. There are many times I pass on a trade because I'm 95% sure they bought it, but I can't be positive that they bought it. And many people, they think that because they see unusual options that they can actually just say, oh, I just want to do that one, or 90% of calls versus 10% puts. Oh, I'm just going to go buy those calls. Or look, you have to dig into the data, and Market Chameleon is frankly the only service out there that allows or shows you and allows you to dig step by step into the data.
I'm sorry. Just to clarify, in my mind, Felix, what you're saying is the unusual option volume gives you the initial idea, and then you go through your steps, which the people would learn in your class on what other items you look at.
Yes.
To make sure it's something that you want to then,
yes.
you know,
It's not just buying, by the way, just identifying that the person buying and being sure, okay? Being sure that he's a buyer is just part one. Once I'm sure he's a buyer, now there's 10 other things I want to look at quickly just to start, weeding out. Is this good? Is this not good? Why am I looking at this? Why am I looking at that? And go through this process, which is what I teach at 3 Steps to Profit.
Excellent. Unfortunately, this is anonymous, but someone enters, once you enter a position, how do you manage the trade? For me, if I would maybe look to just get out of it if I thought it was going against me, rather than put on a spread that I didn't want. What do you do if you buy a call and it goes against you and something's changed within your analysis? What does Felix do?
Sure. Now there's 2 questions here. One is if I have my own idea, when am I changing, right? That's one question. Or if I'm following unusual options activity as my idea, then there's 2 types of people, right? If you're following unusual options activity, which is what we do, then essentially we're as rules based as we can get. We try to be rules based, which means if we lose 50% of the option, 50, 60%, then my advice to people, my suggestion is start wiping those off. We're trying to over 10 trades, we're trying to win 3 to 4 times. But when we win, we're trying to win big. And on the 6 to 7 trades when we're losing, we're trying to cut our losses and manage our losses. Okay, so options buying is flipped. The flip side of option selling. And option selling, you win 70, 95% of the time. But when you lose, you're expected to give a lot back. Options buying is you're going to lose 60, 70% of the time. And when you win, you're actually going to win big. So we're trying to manage that process.
All right. Rajesh is asking, does liquidity of the options matter to you?
It does. It does. However, I say this. When I see someone trading XYZ options that are illiquid, and yet they're trading them, these guys know what they're doing. They know they're paying a little bit of a vig because it's illiquid, but they understand what they're doing. They're choosing to buy options in that scenario for a reason. And all they really care about is the price, how much they pay, how much they think they're going to make, and whether or not that payout is right for them. So I do look at it, but sometimes it draws me to the option. Some people say, oh, you don't want to trade illiquid options. But if the top guy is actually trading them, that actually draws me to them sometimes because he knows that they're illiquid, but he doesn't care. So that's a clue, right? That's one clue.
Interesting. Are you using strictly single options, or do you ever follow a spread is the question.
So the top guys in the world, they come for the leverage. Okay. They don't want to give it away. When you trade a spread, okay, when you trade a call spread and you say, oh, well, I can buy 30 options or I can buy 100 call spreads. Well, up to a certain point, it's almost the same thing. But if you got to think the mentality of a top guy, a shark, they're buying these options because they think there's tremendous upside. And the last thing they ever want to do is sell that small upside call or downside put, because that's the one that explodes higher if they're really right. And there's nothing worse for a top hedge fund manager than to actually be in a put spread during a crash. Right? Oh, I spent $2. I made 10-point spread. Yeah, but you left 90 on the table, right? That's like the worst case scenario. So they don't like generally doing put spreads, call spreads for that reason. And frankly, if I'm looking at a call, yeah, I can't buy 30 calls. I can buy 100 call spreads. Maybe I'm just too big on the calls on the calls. So I would just I would just have smaller calls versus, a larger call spread. I'd always choose the calls. 95%. I would never say always, but 95% of the time.
There you go. All right, this is gonna be the last question. If you and D want to go to the unusual options or take a look, it's up to you. But someone's asking MLCO. It's the stock symbol.
Yeah.
There were some buyers of the SEP 16 calls. They're asking for a look on the It's the only time we'll go to the Chameleon tonight, and we'll end on that show. Is there anything you see in the SEP 16 calls on MLCO? Either of you?
You want to show it to me? Show it to me.
D, you want to
I
bring
know.
it up?
I know MLCO. I know that. There's.
Do you see my screen?
I don't see it.
I
No.
see you're trying to get on it. Let's see. There we go. All right.
I saw it already today.
MLCO.
Yeah.
So what you can do is you can click on it.
To go to the options chain.
Yeah, to go to the options chain, we see 44,000 options traded, 94% calls, and now we can sort of see where they traded. And so what I do and what I teach people to do is sort of follow a story. Like, what's the story? Let's try to figure out what the story is. So I'm looking there to 16. Looks like, okay, 30,000 traded at $1.20, 125. And now you go through, and there's a process to kind of go through to figure out whether they were bought or sold. I believe that I don't know. It seems odd to me. There's something odd I see, but if I go down, just click on quantity just to get me. I just want to see real quickly quantity. I just want to see if there's one big trade.
Okay. One sec. Did my hold on? My screen froze up.
Okay.
But what I do see here is that you can kind of there must be like a lot of trades.
Click it twice. Click it twice.
Here, but right. I think the thing is I think I did click twice and it just keeps.
There's so many trades. It's taken a while to get
a little bit.
Yeah, but what I do see here is that you could see that it traded as high as $1.50, as low as $1.10. So there you go. $3.8 million in notional value for all the trades today. That's the biggest one right here.
Yeah, I would have to take a look. What's surprising, I'll tell you right off the bat, what's surprising to me is that 32,000 options traded, and it only the implied volatility change was only up 3%. That's to me is a little surprising. I would force myself to dig in deeper to that data and start going a lot deeper, like start looking at different things. Now, again, in the webinar that we have that we've done, I did go through some of that, but in the 3 steps to profit, I go through a lot deeper. I go through the exact process of what I want to see exactly, because there's something a little odd about the volatility only being up 3%, frankly.
Well, there you go. A little bit into the mind of Felix Frey. That was an awesome webinar, guys.
Awesome.
Felix, great job. Listen, check out Felix's site, Options Geek. I sent out a link if you want to link to it for his free tour of his site. Anything while we're getting ready to go, guys? Any last comments, Felix?
I answer all questions. If anybody has a problem, you can just email me at felix@optionsgeek.com. Felix@optionsgeek.com. Happy to answer all questions. If you have any questions about the product, I can get on the phone with people. I do that all day. Give you a couple of minutes to ask me questions and tell me what you're looking for. Try to figure out an answer. But at the end of the day, I'm here to help. Want people to learn. Try to get people to understand what the right issues are. And again, challenge. Get out there and ask those questions. Ask those 2 questions. When do you use options, and which one should I choose? The only way that you're going to believe me is if you see it yourself, if you actually go out there and look for those answers yourself.
Great job, Felix. And Dima, I don't know if you mentioned Felix, but we do a morning show every morning at 9 a.m. A lot of chit chat about that today. They were asking, can Felix come on the show one morning? And maybe we can get him on if he's willing to.
Let's do it. My morning's a little tough in the next couple of weeks, but yeah, let's do it. Let's do it one morning.
Awesome. All right, D, I'll see you in the morning. Everyone, thanks for joining us. Remember to subscribe to our YouTube channel. It's a big deal, and you'll get notified when we go live in the morning. And we're thinking about maybe going live whenever we see anything on the Chameleon. Isn't that true, D?
Yeah, that would be pretty cool.
Yeah, it pops up when we're live. It does pop up on Market Chameleon. So if you guys see that in the lower left-hand corner that we're live, click on it and you'll be direct it over to us live on YouTube. All right, guys. Again,
right.
thank you. I know it was a good long hour plus, and we still have a lot of people on. Everyone, thanks for joining us, giving us more than an hour of your time. I hope it was helpful, and we'll see you tomorrow. Have a safe trading week, everyone. Thanks, Felix and
Great.
Dmitry.
Thanks,
Thanks,
guys.
everyone. Have a good night.
Bye-bye.